Hey guys, it's Kim Kristensen with First Class Real Estate Partners. I have with me Brian.Jensen through Zions Bank. We have a program that we're going to talk about that is a loan product that should hopefully make it more affordable, especially if you are looking to buy in today's market. I'm going to have Brian explain this program. Is that okay?
Thank you, Kim. So let me begin with a high-level overview. So the Affordable Home Loan Program allows for 3% down with no mortgage insurance. So no upfront mortgage insurance like FHA, no monthly mortgage insurance. We actually waive the bank closing costs and we subsidize the rate. So the rate's about 1/2 to 3/4 of a point below conventional lending.
Oh my gosh.
Yeah,
so
it's a game changer.
Too good to be true is what everybody's probably talking about. Let me ask you this, the 3% that you talked about, could this be a gift? Because a lot of the times people don't have that upfront money.
Sure. Yeah, so it can be gift or grant funds.
Okay.
And by the way, we are Utah Housing preferred providers. So if they absolutely have to do a zero down, no closing cost loan, we can do a Utah Housing loan for them.
For this specific program though, we don't?
Yeah, that's right. For this one, they can be gifts or grants. And this is going to have a significantly lower rate than Utah Housing and no mortgage insurance. So your monthly payment is going to be significantly lower. Okay,
so it sounds like you cover quite a bit. And we talked about the buyers not having to bring much down other than the 3%. Is there any closing costs that they're going to have to bring too?
It's a great question. So again, we're going to waive the bank closing costs. You do have some third-party fees that are billed through Zion's credit report, flood report, fraud, things like that. So that's about $175. And then you've got your third-party costs, title, escrow, things of that nature.
Yeah.
However, a good agent could ask for seller concessions to get those covered as part of the purchase contract. But we also can provide an additional $1,500 if they're a first-time home buyer.
Oh my gosh.
So they don't have to be a first-time home buyer to use the program, but if you are a first-time home buyer, there's an additional $1,500 worth of closing cost credit available to you.
Wow, so closing costs could actually be a lot less.
Yeah.
So how about like loan origination and things like that?
Yeah, so again, all of the bank fees are waived. And then you certainly could buy down the rate through origination points. Although this rate's already subsidized and lower, and because we believe that rates would go down in the next 12 to 24 months, and you could use this loan for refinance too.
Oh my gosh.
Like I'm not a big, I don't really recommend buying it down. The reason I think someone would buy down the rate right now is if it was for qualification purposes. They want to buy that $550,000 home, but they only qualify for $500,000. If we bought the rate down, it could get them that $550,000. So that would be a strategy. But again, our rate is already subsidized without spending points or origination fees.
Wow. So how about private mortgage insurance? Because it is 3%, typically with conventional loans, you have to be over 20% to waive that private mortgage insurance. So why would they not pay private mortgage insurance for this program?
It's a great question. So Zions actually is paying for it through a single premium mortgage insurance product. And you will see lenders out there advertise no mortgage insurance, and what they're doing is paying for that single premium mortgage insurance policy, but they're raising your rate to do that. We're not doing that. We're actually lowering the rate, subsidizing the rate. We're truly paying for that on their behalf.
Wow.
Yeah, it's a game changer.
So basically the bank is paying that up front so that the entire life of the loan, you don't have to pay private mortgage insurance.
That's right. And this brings up often a common question about, okay, what if I do refinance, or what if I sell in 12 months? Do I need to pay that back to the bank?
Right.
So this is not a grant. There is no prepayment penalties, or there's nothing to repay.
Oh my
so
gosh.
if we refinance this in 9 months, if rates come down, it's absolutely fine. If you decide to sell and move in the next 12 months, that's absolutely fine.
Yeah.
There's no grant to be repaid.
I'm sure you guys are thinking, this is too good to be true.
Yeah, that's a common
Is there
question.
any kind of stipulation? Like, what's the qualifications?
Well,
like, why is Zion's doing this?
Yeah, let's look at that from a high level. So this is part of the Community Reinvestment Act, and banks are regulated through a lot of entities, but one is the Community Reinvestment Act, and it states that banks need to put money back into the community. And so this is the way Zion is doing it with this mortgage product. So by regulation, we're doing it, and that's why it's so affordable.
Oh my gosh, that's great, right?
Yeah, and again, think about this. When we talk about affordability, which is slowing the market right now, right? You can do 3% down instead of 3.5% for FHA or 5% for conventional. So that's already a big savings. On a typical home, between this product and FHA, that's probably $10,000 between this and conventional, excuse me.
Right.
And then FHA has that upfront mortgage insurance, 1.75%. So again, that's about $10,000 on a typical home. And unfortunately, a lot of lenders just breeze over that because they can finance it into the loan. So you're not paying it. Therefore, let's just talk about it briefly.
Right.
But it's an expense and it's sitting on your loan balance and it's eating up your equity.
Right.
So when you factor in the no upfront mortgage insurance, the lower down payment, and the no bank closing costs, it's a big difference in upfront costs for affordability.
Yeah.
But it doesn't stop there because we now have no monthly mortgage insurance
Right.
and a subsidized rate, so your monthly payment is significantly lower. So both in upfront costs and ongoing costs, this is a big benefit in home affordability.
So here's a question for you, Brian. With the rates being subsidized, are they paying this rate to go lower, or can you tell me how the rates work?
Yeah, so it's based off the Home Ready Home Possible rate, which I don't want to get too far in the weeds, but Home Ready Home Possible removes the loan level pricing adjustment. So normal conventional loans have kind of all these add-ons.
Sure.
And so the Home Ready Home Possible is already kind of a subsidized rate because it doesn't have those add-ons. And then from there, we're spending typically 100 basis points to buy that down. So it's almost as if the seller contributed 1% to buy down the rate, but we're doing that.
Slim that down as
Okay. Well, I'll slim it down quite a ways. It's typically 1/2 to 3/4 point below conventional lending. But we're doing that by starting from a subsidized rate, and it's as if we're spending 1% to buy down the rate.
Oh my gosh, that's
But
great.
It's a big impact.
That's a lot that you're saving per month.
Right.
Like hundreds.
And this is a 30-year fixed rate. Now, I don't expect you're going to keep this loan for 30 years. We're likely going to refinance it. But it is a 30-year fixed rate. If rates never came down and you stayed here the rest of your days, this loan is locked for 30 years at this subsidized rate.
So when we talked about the census, and maybe you've already talked about location, like how does one qualify for this program? Is it based on properties? Is it based on like anything specific?
It's a great question. So again, there's actually 3 ways. One is the borrower's income. So the same rule that you would see with most grants, and this is statewide, borrower's income needs to be 80% or less of area median income. But again, those don't work effectively, so I don't typically use that qualification. The other 2 ways is that it's in a lower moderate census tract or a majority minority census tract.
Which means?
So let me talk about census tract a little bit. So census tract is just the way the government kind of draws out the valley, and it's roughly about 1,600 homes. So it's a pretty big geographical area.
Yeah.
And if it's lower moderate income census tract or a majority minority, then this program qualifies through the property, and now there is no top end income limit to you, the borrower. You could make $1 million and still use this loan program.
Wow. So there's not like where you have to buy a home at 450 and under.
That's right.
It can be higher than that.
So it does have conventional loan limit, so $726,200 is the loan limit, but again, that's the loan limit. You could certainly purchase higher. You would just have your down payment bring you to the $726,200.
Wow. Okay.
And you know, often one of the concerns I have people ask is, well, okay, so am I only going to find like beat up properties and run down neighborhoods? You know, I've got 2 young kids. That's not where I want to live.
Right.
And certainly those properties exist in these census tracts. And if someone needs to live there and buy there, this program's great for them, and we want to help them. But again, a census tract is 1,600 homes. So it's amazing some of the beautiful communities and beautiful homes, but because of the average, qualify for this. I mean, I see $1 million properties all the time. It's
still qualifies for it.
Yeah, now again, $1 million property, the loan amount's only $726,200.
Yeah.
But those homes exist, so there's lots in that 700 range, 800 range that this would be perfect for.
So here's a question. So I have a listing in Harriman. Have you seen properties qualify in Harriman?
Yeah, so let's talk just general valley areas. One thing I would recommend is you get with a good agent that understands the census tract and can show you properties that would qualify.
Yeah.
And the other thing that I'll do for clients is show them a pre-approval with the affordable home loan and conventional loan. That way, if they find a home that they absolutely love that's not in an area, they know what they can afford.
Yeah.
But they can see, well, geez, this is $700 a month savings. Maybe I'll focus a little more on this.
Okay.
But generally, from about half of Taylorsville, and then south through Harriman, around through Saratoga Springs, Lehigh, through Draper, none of that qualifies.
Yeah.
So it's really starting in Sandy, Taylorsville, and kind of moving north. About a third of the valley qualifies.
How about like Utah County or up north?
Utah County has a lot that qualifies. Again, kind of that in between through Lehigh, Pleasant Grove starts to be a little bit, but Orem and Provo is loaded with these census tracts. Davis County is super weak. There's 1 census tract in Bountiful. There's some right around the base, and that's it in all of Davis County. But then you get up to Weber County and most of Ogden qualifies.
Wow.
So a lot of the areas qualify.
Yeah.
And again, there's some beautiful neighborhoods and beautiful homes that qualify.
So how do we find these properties? Let's say if a client liked a specific home, how do they know if this property qualifies or not?
Yeah, unfortunately, the government website is not real user-friendly. So I always hesitate to send the buyer to the website because it just gets frustrating. So I like to send them to an agent that has taken some time to understand the website and can overlay that with the listings and can provide those to the buyer.
Because it's better to know before you fall in love with the home, right?
Absolutely. Well, or again, have both options. Here's my conventional option. Here's my affordable home option, and
make it work.
Make it work.
So, are there any kind of credit score limitations?
620.
620.
Yeah, we can actually use alternative trade lines. So if they don't have the trade lines they need, we can use alternative trade lines. At 620, we limit the debt to income to 45%. At 700 above, it goes clear to 50% debt to income. So that's the same as conventional, and yet no mortgage insurance, lower rate. So at the same purchase price, you're going to have a much lower payment. But let's say you're trying to qualify for 600, you only qualify for 500. This loan probably is going to get you to 600 because you don't have that mortgage insurance and you have a lower rate. So you'll qualify for more than conventional.
Wow. So you have to be a first-time home buyer? Because it sounds like you might have to.
No. Yeah, first-time home buyers get that extra $1,500 worth of closing cost assistance, but you do not have to be a first-time home buyer. And you can have other investment properties.
Really? Investment properties too?
Yeah, in fact, home hackers love this, right? You buy a property, you live in it for the next year or two, you move on to the next one, move on to the next one, 3% down, no mortgage insurance. It's a great one.
That's
and
awesome.
It works for single-family residences, townhomes, warrantable condos, and duplexes.
Wow.
So you can have a legal duplex as long as and it doesn't need to be owner-occupied. So let's specify that it's not for investors that want to buy just an investment property. If you turn it into investment property later, that's fine.
Yeah.
But to purchase, you need to be owner-occupied. So the duplex, you need to live in one side.
Yeah. If you have any questions about that, let us know separately. Yeah. So here's the last question. Qualification requirements that might be unique to this loan.
Great. So you do need to be a Zions customer, but you can open up a simple $50 free checking account. That's fine. And you do need to do a home counseling course, but there's a Freddie Mac free online course. So it's simple, easy, watch some videos, which is great for a first-time home buyer. They need that information anyways. Where it's a little awkward is when you have somebody that's on their fourth home and they still need to take the course. But as part of this Community Reinvestment Act, they do need to take the course. So, but it's free and it's easy to do.
How many hours is it?
I think on the website, they say like 90 minutes. People I talk to bust it out in like 45 minutes.
That's great. I had a 4-hour course.
If you're a first-time home buyer, I would say take it seriously and go through the data.
Yeah.
If you've owned 4 homes, I would say play it in the background while you do other things. So, and then the final thing that I think is a little different than conventional loan is it does need 2 months of reserves. So once you've closed on the home, paid any closing costs, we need to see if you have 2 months of payments available in your savings account. So you're not spending that, but it needs to be available.
Right. Which, I mean, here's another thing is that when someone closes on the home, let's say in November, they typically don't have to make their first monthly payment until January, right?
That's right.
So whatever they saved in the month of November, December, could that also, I guess, be considered the reserve funds?
Can't be considered reserves, the funds need to be there. But you bring up a good point that especially first-time home buyers typically don't understand because they're thinking about, well, I'm going to pay rent in November, and then I have a payment due in December, and you really don't. So anytime you close a home loan, you don't have a payment due the first of the very next month. It's due the first of the following month.
Right. Cool.
Well, you build up some reserves.
Yeah, that's awesome, honestly. And I'm super excited for you guys to utilize this loan program. So here's the next question, last question. How do they move forward with this loan program?
Great question. So yes, please reach out to myself or Kim, and you can reach me at Brian.Jensen @zionsbank.com, or you can text me at 805-631-0222. Again, that's 805.
805. Where is that?
Central Coast of California.
Oh, wow.
Pismo Beach. Yeah.
Oh my gosh. Well, 805, you guys. Well, thank you so much, Brian. I really appreciate you clarifying all of that because you don't see these loan programs out, especially right now where interest rates are so high, and a lot of buyers are kind of sitting on the sideline when home values are still going up.
Well, that's exactly the thing. People want to wait for rates to come down, but then the price is going to be up, and you're not saving anything. If you truly want a lower payment, you need to buy now, and then we'll refinance later. So I thank you for this time today, because this program truly is a game changer for home affordability, and when people see it, it's pretty motivating for them. So I appreciate you helping us get the word out.
Absolutely. Thank you so much for taking some time to explain that for everybody, and hopefully we can get buyers out there looking to buy their home, right?
That's right.
Thank you so much, and thank you, you guys. Take care.